I've been asked to provide some guidance on how I find strong support and resistance levels to be used as trade entry levels. So I like to use live examples when I can. This is the New Zealand dollar versus the US dollar. And so let's just have a look at this one. Just trying to move the screen out a bit. There we go. This is the weekly chart. The longer term charts are always the more important charts. Don't forget that. I emphasize this all the time. The fact that we broke the 100-week moving average and this trend line going back to September 2015 is obviously important. It wasn't a very steep bull trend anyway, but the fact that it's been broken is negative. You see we broke down, we retested the trend line, so there was your selling opportunity if you didn't manage to sell it on the break, and we went lower. We're seeing a little bounce, but there's nothing particularly bullish here other than the fact that we're very oversold, but we can remain oversold for an extremely long time. So if we move to the next shot. Okay, so because I believe we are in a bear trend, and because I do think that we've broken the bull trend, as you saw in the weekly chart, and we are in a negative trend, we're looking for selling opportunities on any rally. This is a 4-hour chart, so you do sometimes have to go in short term to look for these opportunities. Of course, you're not going to get that many trading opportunities from a daily or a weekly chart, certainly not from a weekly chart. But this is a 4-hour chart, so you see the 100 period moving average on the 4-hour chart is doing its job, but I think we can push a little bit higher, and this would be for me the best selling opportunity. You've got a good fib level up there at 69.33, which coincides with the 200 period moving average, so that would be a good resistance level for me to sell in the bear trend. WTI Crude Oil has had a really good recovery, certainly since June of this year, so the last 6 months have been good for oil, but when you look back at where we were almost 2 years ago, down at $26, we've had one heck of a slow but steady recovery. Now to me this is a bounce in a bear trend, and if we hold the 38.2% fib level at 58.97, which also coincides with the 200 week moving average, which is just now dipping below that 58.97 fib resistance, so this is an important resistance level, and we could well turn around from here. I think we probably should turn around from here. So I mean, it's definitely worth a short position. It's definitely worth a try. If the bear trend resumes, then we should see some swift moves to the downside, and this trade will work really well. This trend line here goes back to June last year, so it's about 18 months old, and it's around 60, 70, 61 dollars. So we're gonna have to push up through $61 and hold it for me to be convinced that this level has failed. So I do think it's worth the risk reward. You're looking at, sort of 200 to 250 ticks loss, but on the downside, you could easily be looking at a more than $10 profit. Dollar yen has been breaking lower. You can see from the hourly chart that in the short term at least we are in a negative trend. So this bounce to me looks like a selling opportunity, possibly a bear flag forming. We have a trend line and a Fibonacci and a 100-hour moving average all coinciding at the same level. So to me this is a good opportunity. This is the kind of thing I'm looking for. 3 things overlapping, all telling me that it's worth trying a short position in a negative trend. And when you look at the daily chart, I thought we had very good support around the 111.90, 80 area, which initially did work on this daily chart. As you see, we had a good bounce off it, but 2-3 weeks ago when we collapsed through it, that to me was very negative. We couldn't hold above the fib, the 100 or the 200-day moving average. So as we bounce back to those moving averages, that tells me again that we should be trying a short position despite the fact that we are very oversold. So the short-term chart, the hourly chart and the daily chart all hitting important resistance areas in what I think is a developing bear trend. The Aussie dollar, however, is looking a little bit more positive. So we had what I think is a correction in a more of a bull trend, a significant correction over the last 2 months, as you can see. We dipped to the 61.8% fib support at 75.30, which also coincided with the 500-day moving average, which is an important moving average, of course, very long term, at 75, around the 75.40 area. So that 40.30 area was my buying opportunity, and I got my subscribers in down there, and so far so good. We've had a rally. I'm still holding the longs. I still think we can go higher because it's such an important support level. The more important weekly chart for the Aussie dollar also shows how we bounce right off the blue 100 week moving average, which of course often coincides closely with the 500-day moving average, and we've got a good solid trend line going back to the beginning of this year, which we blipped below. We didn't close below it on a weekly basis, and certainly the week that's just passed, we've rocketed back up above the trend line. So, you know, again, this is a positive weekly chart for the Aussie dollar, but you can see why the trend line, the 100-week moving average, and that and the Fibonacci and the 500-day moving average on the daily chart, all coinciding around the same level. Strong buying opportunity. We've got we've got oversold and turning slow stochastics on the weekly chart as well. So I'm very happy with spotting that support level, and very happy with the recovery. Anyway, that's just a rundown of why I choose certain entry points and how I find good support and resistance levels to enter into shorts on a bear trend and longs on a bull trend.